Hello again, everyone. It's Vince Four from TradeWinds.com, and this is our update for January 12th, 2017. Let's take a quick look at today's markets. While we saw a bit more activity today earlier on in the session, the Dow was down as much as 180 points. We saw a nice sell-off early this morning, but then a decent bounce back near the close and into the close, and we almost made it all the way back. The Dow finished lower by just 63 points, while the S&P 500 was down 5. The Nasdaq was down 16, and the Russell finished today down 12 points. Bonds down slightly, but they were higher earlier in the session, finished lower by 27 cents. Gold bouncing about 40 cents at the end of the day. They were also a little higher earlier in the session. And crude continued to rise, getting back above that 20-period moving average here, finishing the day higher by 76 cents or so. Now, one of the stocks that really benefited after the election results was Goldman Sachs, and it went on quite a ride. Now, is this coming to an end or not? I mean, similar to the index charts, this has gone silent here for the last month or so, very much sideways. But there's one thing to keep an eye on here. I'm going to throw on the MACD histogram here, and this is an indicator that I use for divergence, to help me spot divergence. And if we look at this, we're going to go peak to peak here. So here's this peak on the MACD, and you can see that to date pointing significantly lower, while Goldman Sachs was going significantly higher. So a lot of divergence there. As we know, more often than not, the indicator wins out. In other words, this is a sign of a pullback coming. And I think if the markets overall roll over, I think Goldman will certainly take a hit. We can expect it to come back to at least 210 here, which is really the first level of support here on Goldman. So this divergence is something to keep an eye out for. But having said that, nothing has changed at this point. And unless and until we trade below these lows here, there's nothing to worry about. The trend remains higher. Now, looking ahead, tomorrow, we have a number of data numbers due out, like PPI and business inventories, consumer sentiment, the Baker Hughes rig count. But the important one will be retail sales. Keep an eye out for retail sales. That's number one. And number two is on the index charts here. Again, keep an eye on to see if we can break out of this range we've been in, either break above the high or break below the low. And it's the same across the board with the S&P and the Russell as well, all within a range. You can see the Russell here earlier today. We did pop below those lows, but moved right back into that range. So until we move out of that range, there's nothing really to do until that happens. So that's what you want to keep an eye on. Now, we do have a holiday coming up on Monday. Markets will be closed. So I will be back with another update on Monday, and then we'll take it from there come Tuesday. But that's about it for now. Enjoy the rest of your day and the long weekend, and we will see you on our next update.